Millions of Americans are quietly paying thousands of dollars a year into a financial product that their neighbor swears is a scam and their financial advisor swears is a secret weapon. So who's right? And more importantly, which one of them is getting rich off your confusion? Let's set the stage. Permanent life insurance. Think whole life. Universal life. Indexed universal life promises you death benefits, tax-advantaged growth, and a cash value account, all wrapped in one shiny package. The sales pitch sounds incredible until you see the premium, and suddenly you're wondering if you just accidentally bought a timeshare disguised as a retirement plan. Here's the honest catalyst behind the debate insurance companies discovered decades ago: that Americans are terrified of two things: dying broke and dying too soon. So they engineered a product that technically addresses both fears, while also, not coincidentally, generating some of the fattest commissions in the entire financial industry. The technical reality is that cash value inside these policies grows tax deferred and can be accessed through policy loans without triggering a taxable event, which in the right estate planning scenario is genuinely powerful. But behaviorally, most buyers don't hold these policies long enough for the math to work in their favor, surrendering early and walking away with less than they put in. Think of permanent life insurance like a slow cooker. If you use it correctly and leave it alone long enough, the result can be remarkable. But most people open the lid every 5 years, get impatient, and end up with lukewarm soup and a lot of regret. There was a moment in the 1990s and early 2000s when whole life was practically a dirty phrase. Buy term and invest the difference became the rallying cry of every personal finance pundit from here, Wall Street. Yet quietly, high net worth families, business owners, and estate planners never stopped using permanent life insurance as a cornerstone strategy, which tells you the story has more chapters than the headlines suggest. History shows us that financial tools cycle in and out of fashion the way cargo pants do, mocked by the mainstream, beloved by the people who actually understand their utility. The FIRE movement dismissed it, the Dave Ramsey crowd villainized it, and yet the wealthy kept funding their policies while everyone else argued on Reddit. One of the biggest misconceptions is that cash value is somehow trapped or fake money in reality. You can borrow against it, use it to fund a business, supplement retirement income, or pass it to heirs completely income tax-free through the death benefit. The fear comes from misunderstanding the structure, not from the structure itself being broken. The real danger isn't the product, it's the oversell, the under-explanation, and the wrong buyer sitting across the table from a very motivated, commission-based advisor. Permanent life insurance is an excellent tool for someone with a genuine long-term horizon, a high income, and an estate planning need. And it's an expensive mistake for someone who just needed a 20-year term policy and an index fund. Practically speaking, if you are considering permanent life insurance, you should pressure test the illustration, demand a guaranteed column alongside the projected one, and run the numbers assuming you live to 90 years old. Never size your premium so large that a market downturn, a job change, or a life disruption forces you to lapse the policy, because lapsing is where the real financial damage happens. The lesson history keeps teaching us is that no financial product is universally good or universally evil. Context, structure, timing, and discipline are everything. A whole life policy held for 40 years inside a properly structured estate plan can move generational wealth in ways a brokerage account simply cannot, but only if you treat it with the patience it actually requires. Ironically, the people who hate permanent life insurance the loudest are often the ones who bought it wrong, funded it wrong, or bailed at exactly the wrong time, while the people quietly benefiting from it rarely feel the need to post about it online. The absence of noise isn't the absence of results, it's just the absence of drama, and drama doesn't build wealth. At its philosophical core, this debate is really about time horizon and self-knowledge. Do you have the discipline to fund a 30 or 40-year strategy without second-guessing it every time a new financial influencer calls it a scam? If the answer is yes, and the need is real, then permanent life insurance isn't a luxury product, it's a precision instrument in the right hands. The beauty of a well-structured policy is that you can actually get comfortable with any market outcome. Your cash value grows in good years, a floor protects you in bad years, depending on the product type, and your heirs receive a tax-efficient inheritance, regardless of when your time comes. That kind of certainty has a dollar value that never shows up in the buy term and invest the difference spreadsheet. Whether you're exploring permanent life insurance as a retirement tool, investigating estate planning strategies, or just trying to figure out if your current policy is actually working for you, we can help connect you with the right professionals. Check out our links in the description below for resources on financial planning, real estate investing, home contracting work, and finding lenders.